since we did the spinoff and specialized just in restaurants, our revenue has tripled since April of 2023.
Wow.
Yeah.
Quite the fun ride you took there. You went to a startup and then you spun off and then you kept growing and that's a fun ride for an entrepreneurial CPA. I'm Brannon Poe, and this is the Accountant's Flight Plan podcast, where you can enjoy engaging conversations about mergers and acquisitions and accounting practice management. Listen in on strategies to build a more fun and valuable accounting firm. Welcome to the Accountant's Flight Plan podcast. I have a very special guest in that he was a past seller of ours, a past client, and I want to let him introduce himself to you guys. Raffi Yousefian. Did I say that correct, Raffi?
Yes. Thank you, Brandon. Thank you for having me. Hi, everyone. So my name is Raffi. I started my practice in 2016. Before that, I was in public accounting, started my career at EY in 2011, worked at a smaller firm in 2014, and started my practice in 2016. The firm evolved pretty significantly over the years. We grew very quickly. In the first 3 to 4 years, it was at least 100% growth, I think, every year. And in 2022, we decided to niche down in kind of an insecure way. So we decided to focus on three different verticals, our industries, and that was professional services, nonprofits, and restaurants. So if you ask me now, it's not really a niche, but we tried to, niche down, as they say. And in 2023, we launched like a separate brand for just our restaurant practice, and that was called the Fork CPAs. And in 2023, later, or right around the same time, we actually spun off the non-restaurant practice and we merged it or sold it with another firm, public accounting firm, and we did that through Brandon's firm. And so since March or April of 2023, we've been operating as solely the Fork CPAs with a strong niche in restaurant/bar accounting, controllership, and taxes. So just to kind of put things into perspective, after we spun off the non-restaurant piece of the practice, our restaurant practice has, at the time, it was about 70%. So it was always a big part of our business. But since we did the spinoff and specialized just in restaurants, our revenue has tripled since April of 2023.
Wow. Quite the fun ride you took there. You went to a startup and then you spun off and then you kept growing, and that's a fun ride for an entrepreneurial CPA. So
Yeah.
not everybody can grow like that. So your growth model is a strong one.
Thank you. Yeah, it's been obviously a lot of ups and downs and a lot of work, and it continues to be a lot of work. Scaling professional services is not an easy task, especially when you're bootstrapped. But yeah.
Yeah, it's not a linear path.
Right. Yeah, exactly. So,
well, thanks for that background, and want to go back. It's interesting. You decide. Let's go back to pre-startup. Like, what actually made you decide to start your own firm? What do you remember? Kind of what was the deciding factor? Like, I don't really want to. I want to work for myself. I want to go out and launch something, because that's a brave, big step.
yeah, that probably happened much earlier in my youth than something that, after when my career began. It probably happened more like in high school.
Yep.
I was always surrounded by entrepreneurs, uncles, family, friends. Basically, anybody that was successful had their own business. And so we were kind of raised to believe that that's truly the way you build wealth and flexibility and be in control of your future. So it started there. And I remember I think I was in college, like 18, like early, maybe freshman year. I bought this book called Business for Beginners. And there was a chapter on it about accounting and accounts payable. And that was like everything just clicked. Like it was so weird because I was like always like a B student, A minus, never like really into academics. But the accounting chapter just made sense. And so then I used that book and I started doing bookkeeping for my uncle's business. And so from there on, I kind of knew like this is eventually I'm going to open a firm or some type of business.
Yeah.
My dad was always pushing me like, you're really good at accounting. Why don't you just do something with accounting? Why are you trying to? And I had like three, four little businesses when I was in college. He's like, well, don't waste your time with this stuff. Like, just get an accounting degree, have an accounting business. And so it kind of started very early on. And the public accounting was more of just the means to kind of get that experience and
Yep.
professional experience and the know-how. So
Yeah, I had a similar story. I mean, I kind of chose in high school accounting so that I could become a business owner eventually. Because I had an entrepreneur tell me that if you become a CPA, you'll get to see how entrepreneurs are running their businesses, and you'll learn how business
mhm.
operates. And it's like that's what it clicked for me. Like, yeah, that makes sense. If you can understand the numbers, you can that gives you a big leg up. So
Yeah.
and seeing a variety, which it did. I actually was at E&Y, and then I stepped down to a mid-sized firm, a smaller firm, so that I could get more small business exposure.
Yeah. So we had a very similar path, sounds like.
Yeah, very similar path. So then fast forward to um, you have this successful, thriving, growing firm, and you do something that few people actually act on in a very decisive way. And I recall you being pretty decisive when you called us, and you had a clear vision of what you wanted to do. So the counterintuitive part is like to do less to get to that next growth phase, right? Like
Mhm.
to peel things back. Um, can you tell us a little bit about the decision making process that you went through to decide to sell off a part of your practice?
Yeah, absolutely. So the restaurant vertical was always the most rewarding. If any accountant has ever worked with restaurants, you know how difficult high volume and low profitability that work is. However, it is very sexy. We love going to our clients' restaurants and getting treated well and saying, I run the finances for this place. So that was always kind of the more rewarding work. It was the most fun work. And it was a big portion of our business all the way through the spinoff. And not only that, it was the most scalable piece because every restaurant pretty much operates the same way. Every bar operates the same way as a restaurant. You have the POS, you have the payroll, you have the bills, it's the same cycle, it's the same systems. And so it was definitely the most scalable as well. And it was a part of our business that was growing the fastest as a result of those two things, right? Because we're putting the most passion into it, the most templates, the most kind of systemization, if you will, and training and marketing into it. So it was growing the fastest. The other piece of our business was about 30% and had kind of plateaued over the years just because we weren't maybe providing as much value to our clients or not putting too much energy into it. And so it got to a point where the restaurant practice, especially after we lost the Fork brand, was growing so quickly and we really needed the staff from the other practice. And the other practice was fine, it was operating well, it was profitable. Our staff was doing a great job. The clients were happy, but it every day, every other week, every other month, it just felt more and more like a distraction on
Mm.
where the true growth is and where the company's headed. And it wasn't as fun, it wasn't as rewarding. And so I think that was ultimately why in end of 2022, we approached you and said, this is what we want to do. We understand we're going to take a hit on the revenue short term, But the idea is that, that's very short term. I can easily fill that hole in like 3 to 6 months, because I know once we put full energy and focus on the restaurant piece, it's going to grow even quicker than it was already growing.
Yeah.
So I believe that was kind of everything that led up to that decision.
Yeah. Well, it's just, I see so many people kind of live with whatever they have. They just sort of get into this like complacent spot, and they're like, okay, well, we've got this restaurant business, but we have these clients, and there's just, good on you for being so proactive and kind of stepping back, because it is a counterintuitive sort of thing, or at least, I think there's just a certain inertia that a lot of business owners just live with, and they don't change. And, it's interesting because, we run our accounting practice academy, and we've seen a number of our members do something, maybe not as dramatic as letting go of 30% of their business, but, even like letting go of segments, even if they can cash out on those segments, even if they just have to sort of abandon them. Once they have done that and they've cleared the distraction and they've cleared that, it really is a distraction. I think people underestimate just how big of an effect it has.
Oh, yeah.
So I'd love to know, like, right after, like, once the transition was complete and you were really truly free of that other, business, what was that like? What was that like emotionally? What was that like for your team? How did it feel? Was it, I'd love to know that kind of experience from you.
It was a big relief, to be honest. It was, again, not that this practice there was anything wrong with it or that it was extremely difficult. It was just, you felt like this weight had been lifted up, where all of a sudden now you're free to just focus. And, like you said, a lot of people they get into this cycle and they just continue to do it for 5 years, 10 years, 15 years, 20 years. By the time it's time to retire, and you don't really have a very valuable practice because you've never, niched down or whatever it might be. But, accountants are not risk takers by design, as we know. So I think that's what makes it so difficult to be able to do something like this. I remember I had a mentor at the time, and he's a government contractor, has a business with over $50-60 million in revenue. And he always had these best recommendations for books. I would bring up a problem I was having. He just knew exactly what book to point me to. I mean, I think he's read every single business book there is out there. But anyway, on one of our calls, he used an outsourced controllership firm for government contracts or something like that for his solution. And he was like, why would anyone not hire a specialist? Not just for accounting, and for any service provider. And I couldn't answer that question. I'm like, yeah, I don't know why anyone would ever not hire a specialist. Like, if I'm selling my accounting firm, why would I ever hire a broker that doesn't specialize in accounting firms? Or if, I'm getting brain surgery, why would I go to a heart surgeon? Or, like, why would anyone ever, and it applies to legal, it applies to accounting. And, there might be very rare circumstances where it might make sense to work with a non-specialist. But I couldn't answer that question. And it really makes sense from a marketing and sales perspective, is why would and I really think that's what we're going to be, and we're already seeing it. I mean, but I think that's what we're going to see in the next 10 years with the accounting industry, is people are going to have to niche down and specialize more and more and more. Otherwise, they're slowly going to become irrelevant, or not irrelevant, maybe just plateau a bit and not be able to grow as fast. And that's fine if that's not what you want. But I think the writing was all kind of on the wall. And I said, if we don't do this now, when are we going to do it? Right. But to answer your question, it was a big relief. I had all these ideas that I just really never had time for. And all of a sudden now I can focus on these ideas because I don't feel like I need to spend my extra time worrying about the 30% of the business.
Hey listener, are you thinking about selling your accounting practice? In our latest book, Prepare Your CPA Firm for a Sale, we dive into all the questions, from knowing when to sell to finding the right buyer and how to set yourself up for a smooth exit. Download a free copy today at poegroupadvisors.com/prepare.
We have a new listing for sale in Central California. This firm has 40% cash flow to owner and strong staff retention. The asking price is $3,750,000 and the listing ID is CA2013. Visit poegroupadvisors.com now.
People underestimate the value of focusing. It's so powerful in anything you do. Like and half the time, the things that are sort of mediocre in any business, it's because no one's really focusing on it very well. And if you just put some attention to it, it usually the improvements come pretty quick,
And you don't know what you don't know, right? So I was guilty of that when I had 3 so-called niches. I was like, how much more can I know? I know so much about these niches. I know so much about, but like, even if you just look at professional services, like what the hell does that even mean? Like we had digital marketing agencies, we had like dental practices, like we were not experts by any means. And so like you think you know everything, but until you really focus on it, you're like, wow, there's still so much that we can learn.
Yeah.
Even now when we're niched down, I'm still like, wow, there's still so much we can learn about restaurant accounting and finance, and it's just never ending. So,
well, and it kind of comes down to like the value proposition to your client, right? So, if you're a restaurant owner and you talk to somebody who's a generalist, it's going to be a very different conversation, I would imagine. Even the very first initial conversations are different than if they're having a conversation with you because you know the industry so well. I imagine the owner picks up on that pretty quickly.
Absolutely, yeah.
So then that kind of opens up the whole opportunity to really go deep into advisory work in that niche. I think that's what that really is what unlocks it in my mind. Like when you niche down, your capability as an advisor exponentially increases.
Yeah, absolutely. I believe you can't be an advisor I know this is a little extreme and people might not like it, but I believe you can't be a true advisor unless you are niche down. It just, otherwise, most of the time, it's compliance services being branded as advisory. But if you really want to offer deep expertise, you can't, it's very difficult to do unless you are focused on one niche.
Yeah.
Right.
And I think advisory, you mentioned this, prior to us hitting the record button today, is like advisory, that term gets thrown around a lot in our industry and it's not really well defined. What are your thoughts on that? Like how it gets kind of thrown around, and what in your mind, what is true advisory work? What are you doing for the client that is so valuable?
I believe it varies from industry to industry. So what's advisory for a restaurant might be different for what's advisory for a digital marketing agency. But generally, in my mind, when I think of advisory, I think of, okay, sure, you get all the financial reporting done, the compliance, the bookkeeping, the accounting, that's all compliance in my mind. But once the financial reporting is there, now what? I think that's when advisory kicks in. Is someone going to get on a call and walk me through what these numbers mean and how they impact my business and where the opportunities are? And in order to answer those questions, I think you really need to know that niche. You need to know how that business operates. If I'm not an expert in how restaurants operate, how can I tell a client whether their food costs or their labor costs is too high for the industry? Or forget the industry, how can I know if their labor cost is too high for a pizza shop versus a steak restaurant? And unless you're specializing in restaurants, you're not going to know those specifics. I mean, there's so many hours in a week, like to know all the details. And the more detail you can get, the more and more value you add as a so-called advisor. So I think this term advisory has been thrown around very loosely over the last 10 years. And, accountants need to become the new advisors, or otherwise they're going to become irrelevant with AI and automation and all that. And I think with the labor shortage, we're continuing to we as an industry are still just providing compliance and barely keeping up with that. And I think this advisory concept is really just compliance branded as advisory for the short term until we can really figure out how to truly add value and deep expertise at a vertical level.
Yeah.
So,
That brings up, I'm sitting here thinking when you're talking about you can't be an advisor without niching down. Um, One of the things that I get asked about all the time are benchmarks, like in accounting firm benchmarks. And I was on a webinar yesterday, and someone in the Q&A asked, what's a good benchmark for labor? What's a good benchmark for this? And my answer is like, well, I don't know your practice well enough to answer that question because, I see these benchmark reports in our industry, and I think this is useless information because it's not specified to like practice size or, the things that I see in a practice where the improvement kind of jumps off the page for me. A benchmark would not lead you to those conclusions. And I almost think
yeah,
benchmarks are um, just rough, like super rough guy. They're not very informative, in my
yeah.
opinion, in our industry. They may be in the restaurant industry, but in our industry, not so much.
Well, how do you know that? You know that because your niche is accounting firms.
Yeah.
Now, if I'm working with a generalist broker, they might be like, "Oh yeah, the accounting firm benchmark for labor is 30%, or the cash flow owner should be 30%." But it's not always that black and white with all industry verticals. And if you're a true expert, you will know there's growth rate. Your profitability might be low because 20% of your labor is underutilized because it's growth labor. And there's all these little like nuances that need to be considered. Again, in any industry, we're using accounting firms as the example here, but so
Yeah. Yeah. It's well, and I'm hearing more and more about like AI driven advisory, which is interesting to me. I mean, I have explored several of the AI tools, and I'm impressed and not impressed like simultaneously. Like it's interesting the information you get.
mhm.
But some of it's, I see some flaws in it as well. Um, I do know too, like AI is improving pretty rapidly.
Mhm.
Um, I wonder what impact AI will have on advisory work, and just our work in general. And I know um, prior to our show, you had mentioned you've been exploring AI as well. Can you tell us a little bit about what your impressions are so far about AI and where that's going?
Yeah, so we've always kind of been at the forefront of technology, and in the 2016 all the way through 2020, I mean, the moment a new tool would come out, I had to test it. I have like the worst case of shiny object syndrome. And with AI, I decided I'm going to take this one a little slow. I can't keep getting distracted by all these new apps and tools. And what they typically do is, you get app fatigue, you overtrain your team, and then they get app fatigue, and then nobody, it actually
Yep.
deters productivity. So with AI, we're kind of taking it slow, sitting on the sidelines a bit. I'm starting to look into AI agents and the AI workflows, I believe is what they call them, more at a preparation level, bookkeeping level versus advisory. So what can we automate from a bookkeeping and reconciliation perspective first? And maybe financial statement analysis and review for, again, compliance and review purposes, not so much advisory. But it's too early. We're using it for basic things like meeting analysis and transcriptions and a little bit of Chat GPT and Notebook LM, I believe that's what it's called. But taking it slow, I think it's going to be very useful for quality control at some point. Analyze the last 4 months and tell me if some of the accounts look off, and if they do look off, please investigate for things like that. So no question that it's going to have an impact. I don't even see it as an opportunity. I see it as a necessity. You're just going to have to adapt, kind of like how QuickBooks Online 10 years ago was seen as an opportunity. Now it's like, well, everyone's using QuickBooks Online now. If you're not using accountants, your client's probably going to switch their accountants. So,
Yep.
yeah, I'm not at the forefront of the AI
Yeah.
train, but we'll see where that
I,
goes.
I'm sort of watching those who are, And it's funny because I'm involved in EO and I'm in a forum, and one of my EO forum mates just went all in. He's owns a roofing company. He just went all in with AI. And
Wow.
then we meet once a month and we're like, okay, how's it going? He's like, yeah, I've stopped. Um, I realized like it's not there yet. And
Mhm.
so I kind of feel like being on the sidelines and kind of watching the first adopters might be a
Yeah.
wise move at this point. Uh,
Yeah.
yeah. Any tools in particular that you found that are exciting or worth?
Not really. A lot of our existing tools already are they're adding the features.
Yep.
Our reporting tool, it now has AI analysis, and it works well, but it's super basic stuff, like we noticed the revenue has gone up from the last month. You might want to investigate and see what, like just things like
Basic.
that. And
Yeah.
yeah, so it will
What's
get there. It's just a matter of
yeah.
time and a question of, do you want to be, like you said, a early adopter, or do you want to kind of sit on the sidelines and adopt
Well,
it much later?
and I think some of the claims that are being made out there that, hey, this AI tool, it's not really all that. It's not really AI. It's like, what
Yeah,
is AI? You
it's just
know,
automation.
it's
Yeah.
just automation. And I noticed that while we were at the Engage conference at in June for the AICPA, annual conference, and went through the vendor section, which is pretty sizable vendor section, and I was shocked at how much was being advertised as like AI driven, AI. It's like,
Yeah.
all right, you're just
I
slapping.
always tell, I mean, I'm definitely an advocate of it. I think it's going to have a great impact on our industry, but the day accountants and accounting firm owners stop complaining about the labor shortage is the day I believe AI is truly impactful.
Yeah.
That
Yeah.
it's like every year, because, we've been hearing this story for 10 years, and, the labor shortage problem never goes away. So it's
Yeah.
like, it's
It's
like,
it's like when the
great,
cab
let's figure
driver.
it out. Maybe we can
Yeah.
figure it out with AI. Yeah.
It's like the old saying, it's when the taxi driver gives you a stock tip, it's time to get out of the stock market.
Yeah. Yeah.
Um, well, I got a couple of closing questions I want to hit you up with, and one is like a story. And um, do you have a funny or interesting career story that you can share?
Yes. So I actually don't tell this story a lot. I tell it to a lot of my friends, so I'm excited to share it. It's been a while. So as I mentioned, I used to have a few different little businesses. One of them was DJing, which I started DJing when I was like 11 years old, 12 years old, very young, middle school parties and stuff like that. But in college, I started doing nightclubs and a lot of underground techno parties and things like that. And so me and my friends had developed this group. It was called Loop, where we threw parties, we threw events. We were known for our boat parties in DC. And anyway, we did one of our biggest parties. And this is the same time I'm working at EY. And so my focus was partying and DJing. And, it was just, I was young then, didn't really know what I wanted in life and all that. But so we threw our biggest party yet. We rented this huge warehouse, I don't know, like 8,000 square feet or something. And we booked the Martinez brothers and Matt Tolfrey. These are like very well-known international techno DJs.
Oh wow.
And we sold tickets. We hosted this really great party, and I think we had like 800 to 1,000 people attend. And I invited everybody in the office at EY. And I was known in the office to be kind of the social committee guy. I would organize boat parties for the EY annual, whatever it was. It was just like a social gathering. And so I invited a lot of my colleagues to this, and this was the tax department. And this was during tax season. It was like February. So I went into this warehouse party. The warehouse party gets shut down by the DC government. And so we had to move it to a nightclub, which was in a very bad part of DC at the time. I don't know if you're familiar with DC, but it's in Ivy City. Ivy City's now is like up and coming, but at the time you just did not go there, especially late at night. So last minute changed the party there. And, we had like 30 people from EY. A lot of people from work came with their spouses and partners and whatnot. And, accountants aren't used to this kind of party. It was a warehouse party, now at a nightclub and some really bad part in DC. Anyway, they come, everyone has a good time. It's about 2, 3 a.m. and they're trying to get home and nobody can find a cab. And I hear about this Monday in the office. So apparently a lot of my colleagues got stranded in this like really bad part of DC. And they had to end up like because there was no Uber at that time, right? And cabs were really hard to find. This was 2012, I believe, 2011, 2012. And so they ended up finding some sketchy hotel and staying in there overnight. Some people had to walk like miles back to Arlington and go to an area where there's actually cabs. And so it was like this disaster, but really funny story to tell. Luckily, nothing happened to anyone. So, that was all good, but it became a pretty funny story in the office.
Was the party a success with the move and everything? Was it still a success?
Yeah, it ended up being fine. We were very naive. The building, the warehouse that we rented didn't have a certificate of occupancy, and we didn't know about that. We didn't know to ask for that. And basically the DCRA came in, shut us down, and was like, you cannot have a party here. So, but it was a funny story.
Yeah, the joys of, that's kind of in a way, a typical entrepreneurial type of adventure, right? You just go for it and you find out the problems as you're going through. So
yeah, and then naivety is somewhat a good thing in the early years.
Yeah, and sometimes you get away with that stuff, and you probably shouldn't have. So
yeah, it's like your superpower, right? When you don't have experience, you just go all in and you learn along the way. So.
Yeah, exactly. All right, last question is book recommendation. Do you have a good book recommendation for our listeners?
Yeah, I really like this book called Crossing the Chasm by Geoffrey Smart. It's a business book. I read this like 6 years ago or something. And I believe it really changed my perspective on specialization, or hyper specialization is really what the book is about. Hyper specialization for startups, and how that's what it takes to really cross the chasm. And it's a really good book, especially I don't know if accountants are going to like it, but super impactful from a marketing and sales perspective. And so that had a really big impact on me and wanting to niche down, besides all the obvious reasons for niching down, the scalability and efficiency that comes with specialization. But highly recommend that book.
Nice. Awesome.
Yeah.
Well, Raffi, if people want to connect with you, what's the best way?
LinkedIn is probably the best way to connect. Raffi, Raffi Yousefian. So awesome. There aren't that many out there. So
we'll put that in the show notes. Well, thank you so much for sharing your experience. And, it's always a pleasure when we have a past client come on and share
Thank you, Brannon.
Their journey with our audience. So thank you so much.
Thank you. I appreciate you having me.
Thanks for listening to the Accountant's Flight Plan podcast. You can keep the momentum going by subscribing and sharing your thoughts with us. Visit our website at PoeGroupAdvisors.com for more resources, and tune in next time for more exciting conversations like this one.
This podcast was produced and edited by Liesl Epps of Poe Group Advisors. Thanks for listening.